Imagine you're a manufacturer. You pack millions of dollars in goods, load them onto a cargo ship, and send them across the ocean. In many international sales, the exact moment those goods leave your factory, you transfer all the risk to the buyer, long before you've actually been paid. To manage that risk, banks issue multi-million-dollar payment promises. These are legally binding contracts that both sides sign, yet they are often written with the sincere hope that they will never actually be used. Entering this world means navigating a confusing wall of professional abbreviations. You'll see titles like the Certificate in International Trade and Finance, or CITF, and the Certificate for Documentary Credit Specialist, known as CDCS. For a beginner, figuring out which of these credentials actually matters is a daunting task. We can make sense of this by organizing the industry into 6 clear paths. By categorizing these certificates, you can match your specific career goals to the exact training you need to reach them. Every transaction starts with a classic dilemma. A buyer and a seller are thousands of miles apart. The seller wants to receive cash before they ship the goods, but the buyer wants the goods in their hands before they release any money. Foundational trade finance acts as a bridge. By stepping in as a neutral paymaster, banks ensure that both sides get the security they need to complete the deal. To learn these basics, professionals start with the CITF, or the Global Trade Certificate, known as the GTC. These are the entry-level requirements for the industry. They provide the basic roadmap for how goods and money move across borders. Mastering these basics is a requirement before you move on. You have to understand how a normal transaction works before you can navigate the more specialized sectors of global commerce. One of those specialized sectors is the documentary letter of credit. This is a bank's promise to pay the seller, but it relies entirely on paperwork. If the shipping documents, like the bill of lading or the invoice, are filled out perfectly, the bank releases the funds. This creates a massive challenge for the industry. Because the rules for this paperwork are so strict, an estimated 65 to 80% of all document sets contain errors the first time they are shown to a bank. This is where the Certificate for Documentary Credit Specialists, or CDCS, comes in. These professionals are meticulous auditors. They examine these complex shipping forms to ensure they are in total compliance with international standards, allowing the payment to move forward. Because the banking system deals only in these documents and not the physical goods, these specialists are the final gatekeepers. They are the ones who verify the proof and decide if millions of dollars should change hands. While some bank tools are used to make daily payments, others exist purely as a backup plan. Demand guarantees and standby letters of credit sit quietly in the background. They are only triggered if one party fails to do their job or defaults on a contract. Think of a commercial transaction as a moving vehicle. You need a structural seatbelt and an airbag that deploys instantly if the transaction crashes. Professionals with the Certified Specialist in Demand Guarantees, or CSDG, and the Certified Standby and Guarantee Professional, or CSGP, are the people who design those safety harnesses. They structure these financial safeguards so that if a massive construction project stops or a buyer disappears, the injured party is compensated immediately without a long legal battle. Today, many companies have moved away from bank paperwork. They ship on open account terms, which means the goods are delivered, but the bill isn't due for another 30, 60, or even 90 days. This delay puts a huge strain on smaller suppliers. They've already spent money to make the products, but they won't see any cash for months, which can starve a small business of the liquidity it needs to keep running. This is where supply chain finance helps. It uses digital platforms to let suppliers get paid instantly by a bank based on the credit of the large buyer. This keeps cash flowing through the entire pipeline. Specialists with the Certificate in Supply Chain Finance, the CSCF, and the Certificate in International Trade Risk, the CITR, manage this process. They ensure that the physical movement of goods and the financial flow of cash stay perfectly synchronized. Because global trade moves trillions of dollars, it is a target for criminals. Bad actors sometimes use the shipping industry to hide the movement of illegal money, often by falsifying the value of the goods on an invoice. To stop this, banks hire specialists who act as financial detectives. These roles require the Certified Anti-Money Laundering Specialist, or CAMS, and the Certificate in Trade Finance Compliance, known as the CTFC. These detectives screen thousands of international messages, analyze the routes that cargo ships take, and audit supply chains to ensure no one is evading international sanctions. These professionals are the shield for the global economy. By spotting fraud early, they prevent global commerce from being exploited to fund terrorism or illegal smuggling. Not every trade career is based inside a bank. If you work for an import-export company or a shipping provider, your focus is on the physical logistics of getting a crate from point A to point B. This path requires the Export-Import Certificate, or EIC, and a deep understanding of Incoterms. These are the 11 standard rules that dictate exactly when the responsibility for a shipment moves from the seller to the buyer. Think of a relay race. The most critical moment is when one runner transfers the baton to the next. If they don't have a clear, agreed-upon spot for that handoff, the baton drops. Operational specialists use Incoterms to define that handoff point. They ensure that every party knows who is paying for the insurance and who is responsible for the shipping, preventing expensive disputes before they start. You might notice that these paths overlap. A compliance detective fighting crime still needs to understand the basic shipping rules of the operational engine, because that is where criminals try to hide their tracks. Choosing a qualification isn't just about adding initials to your resume. It's about choosing which part of global commerce you want to shape, whether you want to manage the money, secure the contracts, or protect the system. Here is the full landscape, from the foundations of the CITF to the specialized compliance of CAMS. You can see how each career goal aligns with its matching credentials. Which of these roles sounds like the right fit for you? Let us know in the comments which path you're planning to master first, and subscribe for more guides on the mechanics of the global economy.